But emerging markets, and particularly India, is what we have to worry about today, especially after the big fall in India yesterday. Michael Avery, the head of markets research, Asia Pacific at Rabobank, joins us on the phone line from Hong Kong. Michael, thank you very much for finding time for us in what should be a busy morning. Well, should we understand the fall in Indian shares as an Indian phenomenon or an emerging markets phenomenon?
I think it's a bit of both, to be honest. Obviously, the domestic issues are very well known to your viewers. You know, we want to see inflation coming down, and we want to see growth going up. And at the moment, we're not seeing quite enough of either of those trends. But globally, let's just take a step back for a moment. Markets are very muddled at the moment, very volatile and very confusing. But we really have two key backdrops, and that is that in Europe, we have QE going on still. And, of course, QE pushes bond yields up rather than pushing them down. We did initially see them go down, but that's because the market forgot that they go up. But eventually it remembered, and the yields have gone up. And at the same time, in the US, the Federal Reserve is moving closer and closer towards raising interest rates. And of course, higher US interest rates and higher bond yields on the back of what's happening in Europe are a negative for just about every major economy. So you put that together with the specific dynamics of what's happening in India, and it's not the healthiest of backdrops.
Michael, hi, good morning. I want to talk about that impending rate hike a little bit. Do you think that the recent strength in the US data warrants a rate hike in the month of September rather than December? And when it comes, what could the ramifications be on emerging markets like India?
Well, our house call is still that the Fed will opt to delay until December rather than going in September, although admittedly, if we continue to see numbers like yesterday's retail sales report, that will shift the odds back towards September as we go forward. When and if we do start to see interest rate hikes in the US, it's almost bound to be a negative for emerging markets. If you look back at market history, it almost always is, although that, of course, depends on how rapidly and how far the Fed is prepared to move the interest rate. If we only get one 25 basis point hike and then that's it, I think we can all say, phew, sigh of relief, and carry on pretty much as we were. But if the Fed indicate that rates are going up to 1, 1.5%, 2% in pretty short order, then I think that's a whole different kettle of fish.
Okay. Well, Michael, to come back to India, we've lost about 12% from our March highs. Will foreign investors like you see value at current levels, or will you expect that, you know, even now the market trades 16 to 17 times forward valuation, so there is more downside to go?
Well, as I said at the beginning, I think it's a combination of global and local factors that investors will be looking at. I think actually the global ones take precedence at the moment. And I think until that picture is clarified, we will continue to see equities wobble a little bit. In terms of the India-specific factors, we have some important numbers today. They, in the short term, may change sentiment. But we do definitely need to see inflation coming down, and we do need to see growth going up.
So for the rest of the year, Michael, what are your own preferred equity markets to invest into?
To be honest with you, at the moment I'm taking a very skeptical stance, because I think the global backdrop I'm portraying of the Fed moving towards interest rate hikes and bond yields going up anyway suggests to me that one would be well placed to think about taking some money off the table and locking in some profits in most markets. So if we're thinking cross-asset, I wouldn't want to be fenced into having to allocate money to equities particularly.
Okay. Is there no valuation number or Nifty number that you are looking at all? I mean, even when global factors, for instance, when we went through that massive taper talk in 2013, there came a point where it looked like, you know, values shouldn't fall further. Is there any such number, any line in the sand that you're looking at for India?
I don't think there's an easy rule of thumb, to be honest with you. It would be nice if there was, because we'd all know when to dive back into the market again. But I think it really depends much more on the global backdrop. And so whilst it's frustrating for investors to have to look very closely at what's going on in the local market, we also have to keep one eye on Europe and another eye on the US. So we need three eyes at the moment.
Well, we got some data from people who track global funds very closely, and they said that emerging markets saw the largest outflows from their debt portfolios compared to the last 25 weeks. Do you think this only gets stepped up? We're going to see more of this?
Well, I think as we move closer and closer to the Fed pulling the trigger, the impetus is going to be increasingly in that direction. What may happen is after they do that, and we actually finally see what they are thinking in terms of rates, we get a buy the rumour, sell the fact, and then we get a relief rally. But in the near term, if you're looking at the secular trend and you're thinking, what have previous Fed rate hike cycles meant for emerging markets? The answer is usually not something good, particularly when emerging markets in general are seeing rate cuts, as India itself has experienced relatively recently. On that basis, yes, I think people have to take a step back and think, where do I want to put my money? And on the sidelines may be the answer temporarily.
Okay. So finally, Michael, before we let you go, I just heard you mention that you would advise investors to, sort of not take positions now and maybe even book out of the markets. For an Indian investor, should we still believe that this is a correction in an ongoing bull market, or has that bull market theory been challenged?
I think you need to direct that question to Mrs. Yellen and to Mr. Modi. And I think if they can tell you what they'll both be doing over the next 12 months, I can answer that question.
Yeah, maybe for good measure, we can also add Raghuram Rajan to that, our RBI governor. Thank you very much, Michael. It was a pleasure speaking with you. At least clarifies what we should look at and what we should look for. Well, a relief rally after the Fed hikes rates. That was my bet, that September is the rally, not anytime soon,
no,
that.
And it's important that, Rabobank is saying that don't buy into this dip. He advises investors to actually take money off the table and sit on cash. So that's how risk-averse a lot of influential brokerages have become.
Yeah, I mean, as you know, remember they used to tell us, markets make views. Views don't make markets. So, as the markets fall, the opinion is always going to be take off money. Nobody's going to catch the falling knife just yet.
All right.